All right, I've probably spoken to you and told you a little bit about my idea, and that's why I'm sharing this video with you. So, what we have is an idea to form a real estate investment group, and I will continue to tell you why I believe this is a good idea right now in our market conditions and see if I pique your interest. If your interest is piqued, you can let me know, and I'm going to put together a meeting, do a little Q&A, and see how many commitments we can get for this idea. So why real estate, right? So almost all of us know that real estate is a big part of investing. Real estate investment has been a cornerstone of financial success. 90% of millionaires attribute some of their wealth to real estate holdings. Um, what I love about real estate is an asset backed investment. So it's not like a stock that can go up, go down, your money's gone, you never see anything, you can't make any decisions. Um, One beauty of it is that real estate can create some profit sharing and cash flow while it also increases equity, both increasing your net worth. So, why real estate investment group? What I've found is I have plenty of friends, clients that would love to invest in real estate. But right now, the interest rates, there's two things that hold them back. The interest rates are so high that it makes finding a rental property very difficult to cash flow, and the down payment, is extremely high, usually 25% to get in. So even if you put 25% down on a $400,000 property, you've invested $100,000, it still may not cash flow. So um, with an REIG, we can invest in real estate with a lower buy-in and ride the equity train that we've been seeing in Middle Tennessee. Property selection and the management is taken care of for you by me. I have experience buying real estate. I have experience renting real estate, flipping real estate. I will be the real estate expert for the group. So here's what I ran. So I've identified two properties that when interest rates were awesome, they would have been a no-brainer. They're great properties, great condition. But whenever I look at purchasing them myself, there's two properties here. One's 215 Bedrock Drive. The other one's 7009 Indian Ridge. I'll show you the details on those in a second. But based on the purchase prices, you can see here $500,000 and $350,000. The down payments, are going to be well over $200,000. I would be getting a loan, so for 75% of each, which includes, about 15 grand in closing costs. Now, whenever we do the side-by-side comparison of purchasing something by yourself and financing versus the REIG, we'll see that, property management fees stays the same, taxes same, insurance same, getting your tax prep done the same, HOA fees, all that stuff's the same. The big difference is obviously right here, mortgage payments at 7.5% interest rate, which is pretty common right now for investment property. The payments on the properties absolutely kill you. In fact, both of these properties, even with a very large down payment, very good properties, would have a negative cash flow, meaning that if you bought these properties yourself, like if I did, I would actually have to invest about $1,000 a month of my own money just to cover the payment. Now, while the equity may be going up and hopefully up more than what you're paying, it's just not very attractive. It's not attractive at all. So the difference in financing versus buying cash, you can see with the same purchase price, the down payment is the whole purchase price, right? Our closing costs go down considerably. As many of you know who bought a home and got a loan, the biggest part of your closing costs is in fact bank and lender fees. All of the expenses stay the same, except obviously there's no payment. So whenever you look at about $50,000 in payments, instead of making those interest, those payments to the bank and the bank making money, that actually becomes cash flow. And with our total investment of 501, just a little bit over, we have some closing costs and the price of the home, our annual cash flow is up, over $40,000. Now, what that means is on a $40,000 cash flow, that the returns, your annual ROI cash flow wise, hovers right around that 5%. So if you're cash flowing at 5%, plus you're gaining equity at around 5%, now we're gaining a net worth of approximately 10%, rather than if I finance, I'm actually potentially losing money, especially on the front end when my payment is going mostly towards interest. So it's quite clear to see that the difference on the return on investment is over 10%. One where I'm barely scraping by, another where I'm cash flowing, building equity, potentially preparing to build a great portfolio of rental properties. The difference is I'm doing it with partners that have cash. So for $850,000 purchase of property, there's going to be a little bit, expenses, right? So the idea is to sell 35 shares in an LLC partnership. I'm not exactly sure. My accountant right now is looking at the best way to set that up. But if we sell 35 shares at 25 grand a piece, people can buy one to as many as they'd like, and we'll raise $875,000. Now with the total investment at around 855, that leaves $20,000 for some corp setup, attorney's fees, accounting fees, things like that. The idea is I hope we have about $10,000 left in that operating budget in case we do have some unexpected maintenance. Heaven forbid an HVAC unit or something needs repaired, and we have a big hit like that. $3,000, $4,000, $5,000. I don't want to have to come to all of the members of the REIG and ask for a few $100s to make a repair. So the idea is we'll be able to get fully set up, purchase the properties, and have some operating expenses for the unexpected. So anticipated ROI, you can see if you purchase one share, $25,000, when you're looking at around a 5% cash flow, that's about $1,200 a year, and the equity increase will be really close to the same. So when you look at $2,400 net worth increase, it's 9.6%. So the return on your investment would be 9.6% annually. Obviously, if you go up to 4 shares and make a nice round $100,000, like I anticipate doing, each year you're going to increase your net worth almost $10,000. Still, percentage is the same. Doesn't matter how many shares you buy. I just wanted to show the two examples. In general, the idea would be that for every share that an owner has, they would have one vote. So obviously, people that have more skin in the game, more money, have a little more voting power. That's extremely common in all types of partnerships. I'm thinking that what we would do is have a 75% passing vote for any new purchases, any sales of property, any refinances, any major decisions would go to the owners / shareholders, and we would take a vote. Who knows? Interest rates go down after these two properties are purchased, and there's another property that looks good. Who knows? Maybe we refinance these two properties and purchase a third. As long as the cash flow is still good, and we're building equity on more than two properties, it would be a no-brainer. All of that stuff will come in time, and we'll make the decisions when we get to them. The important thing to note is that each person has one vote per share they own. Some of the details to be worked out would be holding periods. If we're going to have a 6-month, 1-year holding period, my idea would be that your cash flow is going to come to you annually by a dividend or a K1 distribution, whatever it ends up being. And your share itself will gain value through the equity of the home. So say in 2 years you want to sell your share or shares, we would do an evaluation of the overall worth of the assets that we're holding, divided by 35 times how many shares you have, and you would first have to offer those shares within the group to current shareholders, and after that we would talk about how we'd go outside and bring in a new investor. So here's my target properties. Right now, this home is currently off market. I do have a purchase option on this property. I am also currently renting this property out. So it's currently rented at $28.50 per month, and that's the numbers that I used in there. The tenant is 100% on time and is leased through the end of June. So at the end of June, I anticipate this renter wants to stay in, probably have an ability for $100 a month increase. But anyway, great property. You know, it's only a 2016. It's in good shape. I'll show you some of the pictures here in a minute of the property. This home is actually in the neighborhood I live in. It's in White House. Good property, good, neighborhood. There's just nothing I can see wrong with this property and investing in it, which is obviously why I have the purchase option on it. The second property is also in White House on the Robertson County side in Indian Ridge, which is a very popular community. It does have some rentals. They're a little bit smaller houses, but they're all brick, they're well-maintained homes. This particular house is a little older, 2003. It does have a brand new roof on it, less than 6 months old. So that, reduces some of the risk. It's been painted. Both of these homes are 100% move-in ready. They need nothing to get a tenant moved in except finding a really good tenant. This is just a look at a little bit of the price performance over time. So these slides could be a little bit wacky order. I've put this together quickly. I didn't want perfection to get in the way of progress here, and I wanted to get some information out to everybody. This is the data for homes in Sumner and Robertson County that are between 2000 and 2023 construction. So no new builds are put in here. So each year I took the new builds out. You can see from 20, 21, 22, prices were going crazy like they have everywhere. The last couple of years, with interest rates going up, we can see that the prices have stabilized and even come down a little bit. But that said, there's an upside risk to this. If in fact, like all the experts are saying, interest rates make any move downward this year and potentially around summertime, we anticipate to see prices go up. So as a cash buyer and cash buyers, we're in a unique position right now where when interest rates are high and everybody's stalled out because they don't want to pay those interest rates, we can come in with cash, take advantage of the lower price, and then, whenever interest rates come down, should get some immediate equity. But, what if now is the peak and things are just going to go to crap, overnight? Well, this is the thing about real estate is there really is no long-term peak, right? So I tell clients this often. It's like, if you were a buyer in 2007 in these same counties, same age homes, and by 2009, you were feeling pretty bad about your purchase. You maybe were even upside down on your mortgage. And you could see that continued for a few years. But ultimately, real estate on average is going to go up 4 to 5% on average, historically, year over year average. Therefore, if you can hold on to it, it's going to recover. The same person in 2007 that was crying in 08 and 09, by 2015, they were able to sell their house and make money. And as we know, if they held on until 2022 or 2020, they made a huge chunk of money. So real estate really is about timing and about knowing that whenever you get in, like right now, you have to be able to plan on holding the investment. And if things change and it's time to strike and sell, then you react and you do that. So the idea is this is a long-term investment. We're trying to build wealth, build equity, build a portfolio, and get in at a good, reasonable price and take the bank out of the equation and their currently high interest rates. Yep. So what's in it for me? Well, one thing that's in it for me is I don't have to go borrow from the bank. So I can invest just like you. My plan is to purchase 4 shares at $100,000, which leaves plenty of shares, 31 to be exact. I will act as the property manager for an 8% fee of the rent. That is very common. In fact, more commonly, it's about a 10% fee. And honestly, If I could find someone else to manage it for 8%, maybe we would vote on that and do it, because I can assure you that the work that goes into it is not great when you're only managing a couple of properties for the fees. But anyway, I'm going to be the manager. I have experience putting great tenants in my properties. I use a TransUnion software that they pay for the application that's very good about selecting renters. I've had great success with it. The other benefit to me is that when the real estate group purchases property or even potentially sells property, I'll be the dedicated real estate agent, and we'll make commission on that. So those are the advantages to me. The advantages to you are you become a real estate investor without the huge down payments, and you're a real estate investor gaining equity and not suffering through the high interest rates right now. I'm going to go ahead and show you the pictures of these properties that I've identified just to give you a look. And if you have interest after this, please text me at 615-970-8098. Say that you're interested. If you don't mind, if you have a high interest level, give me some idea of what type of liquid cash that you would have that you could commit if the deal comes through and it seems like financially it makes sense for you. So here's Bedrock. This is the home in my neighborhood. It's a nice large home, all brick. Again, it needs nothing. This is the pictures taken right before I rented it out this time. Overall, just nice, solid home. Great neighborhood. Could probably sell my purchase option, but I'm more interested in building a rental portfolio. All right, so that is 215 Bedrock and White House. And here's the less expensive, the 350 house, 7009 Indian Ridge. Again, it's been freshly painted. It's ready to rock for sure. 3 bedrooms, 2 baths. This is a entry type of home for people. Great rental. By the way, I should note, when I rented out the other home on Bedrock, I had 5 people that applied and were highly qualified and would have been good renters. So there's a high demand for rentals right now, all over the place, and White House is no exception. There's a master here, Indian Ridge. This home will rent out pretty easily at $1,850. Again, all brick home, new roof. Hard to go wrong. All right, so that's what I had. That's what I wanted to share. If you have interest, please let me know. I will set up a meeting where we can do some Q&A and see how we proceed. Obviously, time is important right now. Indian Ridge is on the market. It could sell at any point. We could always pull this off with just Bedrock, where I have the purchase option on it. But I really think that both of these are desirable properties to put in a portfolio.